There is a number that every silver owner has heard, $10,000. And almost everything you have been told about what that number actually means is wrong. Not slightly wrong, completely wrong. I have seen this misunderstanding in comment sections, in forums, in Facebook groups, and even on other YouTube channels covering precious metals. People think the $10,000 limit means you cannot sell more than $10,000 worth of silver without getting reported to the IRS. Some people think it means you cannot own more than $10,000 worth of silver legally. Some people think it applies every time they walk into a coin shop. Here is the truth. That number comes from a completely different law than the one most people think it does. And understanding the difference between these two laws could save you from making a decision that lands you in serious legal trouble. Because there is a trap buried inside this confusion that almost nobody is talking about. And that trap has sent people to federal court. Stay with me because by the end of this video, you are going to understand the $10,000 rule better than 90% of silver stackers in America. This is growth grid logic, not hype. Before I get into the mechanics, I need to set up the framework that makes everything else make sense. Here is the single most important thing you need to understand about silver reporting rules in the United States. There are two completely separate IRS forms. Two forms, two completely different triggers, two completely different situations. And almost every piece of confusion about the $10,000 rule comes from people mixing these two forms up as if they are the same thing. They are not even close to the same thing. Form 8300 applies when you are buying. Form 1099-B applies when you are selling. Different forms, different triggers, different rules. They do not overlap. Once you understand that distinction, the entire $10,000 mystery unravels in about 60 seconds. Let me walk you through each one. Form 8300. This is where the $10,000 number actually comes from. And here is the first thing that will probably surprise you. Form $8,300 has nothing to do with precious metals specifically. It has nothing to do with silver, nothing to do with gold, nothing to do with coins or bars or rounds. Form 8300 is filed by any business at all when they receive more than $10,000 in cash in a single transaction or in related transactions. A car dealership, a jewelry store, a real estate agent, a precious metals dealer. If any business receives more than $10,000 in cash from you, they are legally required to file Form 8300. That is it. That is the entire rule. Now here is the critical question. What counts as cash under Form 8300? Because this is where people get confused and where the trap I mentioned gets triggered. Cash under Form 8300 means physical currency, actual paper bills, US dollars, or foreign currency in physical form. Here is what is specifically not considered cash under Form 8300. Personal checks not cash, wire transfers not cash, AC payments not cash, credit cards not cash, debit cards not cash. So if you walk into a coin shop and buy $20,000 worth of silver bars and you pay by personal check or wire transfer, no Form $8,300 gets filed because you did not pay in cash. But if you walk in with $20,000 in physical bills stuffed in an envelope, that dealer is required by federal law to file Form 8300 within 15 days. Simple, clean, has nothing to do with what you bought. The 8300 is triggered by how you pay, not what you buy. Now here is where the trap lives, and this is the part I really need you to hear. The trap is called structuring, and it is a federal crime. Structuring means deliberately breaking up transactions specifically to stay below the $10,000 cash reporting threshold. Here's an example of what structuring looks like. You want to buy $25,000 worth of silver coins, and you want to pay cash. You know about the $10,000 rule. So you decide to go to the dealer 3 times. $8,000 on Monday, $8,000 on Wednesday, $9,000 on Friday. Each individual transaction is below $10,000. No single Form 8300 gets filed. But here is what you just did. You committed a federal crime. It does not matter that buying silver is completely legal. It does not matter that you would have owed no tax on the purchase. The act of deliberately structuring transactions to avoid the reporting threshold is a crime under federal law. Regardless of whether the underlying activity is legal, The IRS and FinCEN specifically train bank employees and dealers to look for this pattern, and the penalties are severe. Asset forfeited, federal prosecution, prison time, and serious cases. I am not telling you this to scare you away from buying silver. I am telling you this because this is a trap that catches people who think they are being clever when they are actually committing a serious federal offense. Stay above the line. Pay by check or wire for large purchases. Keep your transactions clean and simple. Now let us talk about Form 1099-B, because this is the form that actually applies when you sell precious metals to a dealer. And the rules here are completely different from everything we just discussed about Form 8300. Form 1099-B is not triggered by the dollar value of your transaction. Read that again. Form 1099-B is not triggered by the dollar value of your transaction. It is triggered by the metal type, the form, and the quantity. This is the part that almost no one gets right, and it is critically important for understanding your actual reporting exposure as a silver stacker. Here are the specific thresholds that trigger a 1099-B filing when you sell to a dealer. Silver bars, 1,000 troy ounces or more. That is the threshold. Below 1,000 troy ounces of silver bars, no 1099-B is required. 90% junk silver. $1,000 face value. That sounds like a dollar amount, but it is actually a quantity measure. $1,000 face value and 90% silver has a current melt value of approximately $66,000. So the actual dollar threshold is far higher than most people realize. Foreign gold bullion coins, 25 coins. Canadian gold maple leaves, South African Krugerrands, Mexican Anzas, and other designated foreign gold bullion coins trigger reporting at 25 coins or more. Gold bars, 1 kilogram or more. At current gold prices, that is roughly $150,000 worth of gold. These are the actual reporting thresholds, not $10,000, not some arbitrary dollar amount. Specific metals, specific forms, specific quantities. And here's the part that every silver stacker needs to hear. Form 1099-B says nothing about American silver eagles. Nothing. It says nothing about Canadian silver maple leaves. Nothing about any modern sovereign silver bullion coin. It says nothing about American gold eagles or American gold buffaloes. Nothing about any generic silver or gold rounds from private mints. These products are simply not mentioned in the 1099-B reporting instructions, which means selling American silver eagles to a dealer does not trigger a 1099-B filing, regardless of how many ounces you sell. 10 ounces, 100 ounces, 10,000 ounce. No 1099-B required. Now I want to be precise here because precision matters with legal topics. This does not mean your profits on silver eagles are tax-free. You still owe capital gains tax on any profit when you sell. The IRS collectibles rate of up to 28% still applies. What it means is that the dealer is not required to file a 1099-B reporting that specific transaction to the IRS. That is a meaningful distinction, and it is one of the most important strategic considerations for silver stackers thinking about privacy and reporting exposure. Now let me address the one situation where these two forms actually intersect in a way that catches people off guard. American silver eagles are denominated as $1 coins under U.S. law. American gold eagles are denominated as $50 coins under U.S. law. They are legal tender. They are technically U.S. currency, which means that if you bring a large quantity of American silver eagles or American gold eagles to a dealer as payment for another transaction, the Form 8300 cash reporting rules could technically apply. 10,000 American silver eagles at their $1 face value equals $10,000 in U.S. currency. 20 American gold eagles at their $50 face value also equals $1,000 in face value currency. In practice, the real market value of those coins is far higher than their face value denomination. 10,000 American silver eagles are worth hundreds of thousands of dollars at current silver prices. But the legal framework around Form 8300 and U.S. currency denominations creates a technical overlap that is worth being aware of if you are ever using American eagles as a medium of exchange rather than simply selling them to a dealer for cash. Let me also address capital gains tax briefly, because this question comes up constantly in the context of silver reporting. When you sell silver at a profit, you owe capital gains tax on that profit. Full stop for long-term capital gains, meaning silver you have held for more than 1 year. The collectibles tax rate applies. That rate goes up to 28% for high-income earners. But here is something that surprises a lot of stackers. If your total taxable income is below $48,000 as a single filer or below $96,000 as a married filer, your long-term capital gains rate is actually 0%. Zero. The 15% bracket applies above those thresholds up to higher income levels. The 20% bracket applies above roughly $530,000 for single filers. The actual tax you owe depends entirely on your total income picture, which is exactly why I always say you need to speak with a qualified tax professional before making any significant silver transaction. The reporting rules tell the IRS the transaction happened. Your tax situation determines what you actually owe. Both matter, and confusing the two is how people end up with unexpected tax bills and stressful IRS letters. Let me bring this all together with the clean summary you can actually use. Form 8300 is about how you pay when buying anything. Cash over $10,000 triggers the form. Checks, wires, and cards do not. The form is filed by the business, not by you. Structuring cash transactions to avoid this threshold is a federal crime, regardless of whether buying silver is legal. Do not do it. Form 1099-B is about what you sell and how much of it. Silver bars over 1,000 troy ounces trigger the form. Junk silver over $1,000 face value triggers the form. Foreign gold bullion coins over 25 coins trigger the form. American silver eagles, American gold eagles, and generic rounds are not mentioned in the 1099-B instructions and do not trigger dealer reporting. The $10,000 number everyone talks about comes from Form 8300, which applies to cash payments when buying, not to silver sales, not to silver ownership, and not to any dollar value threshold on the selling side. Capital gains tax applies to all silver profits, regardless of whether a 1099-B was filed. Reporting and taxation are two separate things. This is the framework. This is the reality, not the rumors, not the fear, not the misunderstanding that has been circulating in precious metals communities for years. If this gave you clarity that you could not find anywhere else, hit subscribe. Growth Grid covers silver laws, IRS rules, and market reality every week. No hype, no agenda, just the data and what it actually means. Drop your questions in the comments. I read every single one. Logic, not hype. See you in the next one.